All right, guys. Thanks for sticking around for the end of day webinar today. It is Monday, June 27th, 2016. Obviously, the market is still somewhat in despair from the Brexit vote. Yet, with just a little bit of patience and discipline and just using our standard setups, I managed to put together a pretty decent day here of just over $1,200. So let's get right into the trades. What I think I did well, what I think I did bad, what we can do better tomorrow, and what to expect for the rest of the week. Let's start with NYMX. This was my favorite chart this morning off the open, as I mentioned pre-market. Although this pre-market we were looking at the 320 level for the breakout, and then after that we were looking for 350 to hold a higher low, which it didn't. So the initial chart I was looking at for NYMX was just 320. It looked great on the hourly, so we're on the 60-minute chart here, looking for a breakout, and on the higher lows there. I kind of just scooped some up right through 26, and it was very small. As you can see, it was one of my smallest gains of the day. So I came in today very cautious, as you should, when the market is, adjusting to new territory. It's obviously gone down quite a bit since Thursday, and so the smart thing to do, what I usually do in these situations, I just back off my share size. I get a little less aggressive, especially on a Monday morning, until I see where things are going. So I went ahead and took just a very small buy on NYMX at 26 to start the day. It took a nice run up, and I decided instead of adding to the position, I would just take the small gain to start the day off and then look for a better position on AKEER. So right when I was in the middle of that one, AKEER kind of popped up and really hit my radar hard as a more probable trade for my style. So I just went ahead and took out that NYMX for a small gain. Gave myself a little bit of padding for AKEER. Here's where we were at with AKEER. I think I'm going to go to a 1-minute chart for this because that's what I was watching off the open. So on a Monday morning, I usually start with a 1-minute chart and then switch to a 5 in the late afternoon. I was watching this VWAP test over and under right around here. And here's what I saw. I saw this one last attempt at a wash right there. You can see just a little extra volume from the last 4 or 5 minutes on that push to the downside. And as soon as that held and reclaimed, I thought I liked it for a long with risk off of maybe 60 or 55 for a little wider risk. Probably 55 I was thinking at that time. But yeah, what I like is when I see like some kind of decent consolidation. And if I see a dip like that, and then it just comes right back up and holds, I'm looking really close. The buy here was through 80 for the break back out, but I dipped my toes in a little bit just under 72, 73 right there. Just small, very small to keep the risk low. So if it fails, it's not going to kill me. It's going to be like a $30 loss. It's just going to be a small chunk of the 70, or half of the 70 that I padded the morning with. And then I just added through 80, and it just turned out to be a really nice trade. I got some out in the 315s, and just around 310. What we were looking for on this one, again, there was a higher low for a continuation. And I did take it all out here, and I tried to look for a quick dip in this area, but it just didn't hold, so I cut it off really quick. And that long trade just turned out to be a quick 300 off the open. So that was a good start to the day. Considering I was expecting it to be a fairly slow day. And then I was kind of starting to look for backside on this one, but I didn't actually get in until, I pretty much left this all alone right here. It wasn't until we got back under VWAP that I started looking for short. And again, we're kind of tightening up our rules a little bit on what we're using for shorts. And I'm trying to really advocate and encourage just waiting for either a true reversal, so a lower high and then under, our regular trend line here, or a breakdown below VWAP, by what time, and then just looking for lower highs or a pop and reject for the short. So I looked for a short in this area here, and that actually ended up being the biggest trade of the day for me was AKER. And I did. Now we're on a 5-minute chart here, so I did cover before I went to lunch, and I think it was a $400 profit before lunch, yeah. And then I got back from lunch, and we were looking at this typical setup that we use quite a bit now, where it looks like it's going to set back up for a long, And then when it fails, I look for the other short opportunity now that we have a few more buyers in, some more longs to help wash it out. Remember, the way that I played this one, I was hoping for an 80 over-under test and then a fail and a lower high to short for a low-risk entry, risk off, 85. Didn't quite get there, so I kind of traded on the fly. I saw this pretty harsh rejection. You can see the volume is pretty low, but there's a little extra volume in that. And I scooped some short in this area here, but not much, just a little bit, because I was still thinking it could come back and retest 80, and I didn't want to put on much risk there without any volume. But it kind of came down, tested 50 EMA, and then I mentioned, hey, on the stream, I said, watch 65 for the lower high. If it puts in the lower high, that could be it. I had the line marked. We saw the lower high, smacked the bid for more short, and it gave me a couple extra $100 looking for that 40 wash at the end of the day. Covered at 42, 45, and 46 on this one. So that was AKEER. BSPM, I just took a one little dip buy on that I couldn't get anything going on. I think it was in this area here. I was hoping for a higher low. It just looked sketchy, so I took it off for a $19 gain instead of a loss. So not much to say on that one, but BSPM was on watch this morning on our watch list for a bounce. I was looking at the hourly chart and I thought that maybe it would be okay to look for a bounce. I was kind of checking it out near the low 4 area and I almost scooped it up just at 410, but I looked at the chart again and I was like, well, I don't really think I can make any sense of this or explain this one as a good risk, low risk setup. So I wanted to see at least a lower high, but then it just kind of ripped and it kind of just left me behind. So I left it alone. It was a great opportunity. Unfortunately, I missed it. But I think that the important thing to realize is that when I miss an opportunity like this, I don't dwell on it. I don't let it affect my mood. I don't let it affect my attitude towards the rest of the day. I just say, hey, that's a missed opportunity. There's going to be 10 more today. Move on, leave it behind. So I just moved on from BSPM, called it a miss, and went on to the next door later on, which was FSCC. And this is where I wanted to talk a little bit about changing my bias in the fly. So, this was a very, very nice long-looking setup after lunch. So when I got back from lunch, there was two charts I really liked. One was FSCC, and the second one was AKEER, the second short that I was talking about for the extra 200 there. Before I get into the FSCC chart, the one thing I wanted to mention was, yes, we're in a bear market right now. Currently, it might just be a short-term correction with the Brexit, but regardless, we are in, the market's taking a hit right now. Now, I don't want that to be mistaken, though. You can still make money in this market. What I think is the most important thing is that we're just being extra patient, waiting for the right setups, only trading when it makes sense. So I'm going to show you how the FSCC trades, I'm going to show you how both sides made sense to me for the trades I took on them. And I'm going to show you how I changed my bias on the fly and why I did it, okay? So I came back from lunch. I loved the way that, first of all, you guys know that I like consolidation a lot. If a stock is consolidating over VWAP over lunch, especially if it's over VWAP and 50, I love it. So this was attractive to me, big time, right off the gate. Now, one thing I did mention, though, is that the market is weak today, so the market's not really on our side. So if I'm looking for a breakout, I'm going to be very cautious. If I notice something in the tape that could change my bias, I'm happy to flip it if I see something that's worthwhile, okay? So here's where I was kind of at with this one is I liked the 38 base on the VWAP here and this consolidation as a possible long setup. Now, when the higher lows came in, that's where I really started to like it. Now, it's just lacking a bit of volume. I did mention that, hey, it's kind of lacking volume. So I don't think this is the kind of trade that I'm going to take a lot of size on. But I do think that it's worthwhile to look at, and it could actually end up being, a decent size, a decent gain if it breaks high a day. So my idea here was pretty simple, scale in the higher low, or if you're really confident, you could just use that consolidation as your buy point through 40. But the whole point is, what are you risking? You're risking off, in this case, 38 is the base. So it's like if you're in at 41 or 42, you're risking like 4 cents. 4 cents on, let's say, 1,000 shares is $40. And the reward you're looking for is a breakout through 60, so maybe a 65 exit for 250. So we're talking about, $200, $250 gain for maybe a $40 risk. And a lot of time I won't even make it a $40 risk. I'll start with you could always just start with 600 shares right here, or 4 or 5, whatever you're comfortable with. Let's just say, for the sake of argument, 500 shares at 42, risking off 38. is $25 risk, and then just add to the winner once it's confirmed that higher low and starting to break out again. So maybe start with 500 at 42, add 500 more through 45, and then just anticipate the breakout. Now here's where things got a little dicey on this. Was I was in it. I was looking I was hopefully looking for a big, fairly good size win on it for the kind of day that we're having, a slower day. But what I saw was this 50 break, and I sold half of it just through 50 here at 52, as I always will. If I'm risking 4 cents, and I'm like 10, 12 cents in the money, I'm going to cover at least a third just to make sure I get paid. I was looking for this higher low to hold. Well, first of all, I was looking for a higher low to hold up here. But on top of that, it kind of, remember we were watching the tape and I said, you know what? It looked like a bunch of people, we saw a bunch of prints go through in the high 50s. Sorry, the high 40s in this area here. I saw 4,000 prints, 5,000 prints, 2,000 prints. It looked like there was an abundance of buyers hopping in on the offer to get in this trade anticipating the 60 break. But guess what? The tape was heavy. What do I mean by that? Well, even though there was a bunch of prints, like you see right here, these 30, 3,000, 2,800, I was watching those prints go through. I was tape reading into the offer in the high 40s, but see how these offers keep coming in? That tells me that the stock is generally a little more heavy. So even though there's a lot of people buying, it shows me that smart money, maybe market make, maybe institutions, whoever's in it, smart money is selling up there. So I instantly changed my bias. I was like, okay, well, I'm long, I lock some in, but I feel that there's a lot of buyers up here in the mid 50s, and if it fails, those overhead buyers are really going to help wash this out into the close. So that was my thought process going into this trade here. So I just turned around and flipped that long out. I sold it at 48 for the rest. So a small gain, only a tiny gain on this trade all around. But then I turned around for the short, which was the next trade. And so like I said, if it doesn't hold 45, or if it puts in a lower high of 47, let me clear this up a little bit, then I think the longs are going to bail. So all these people that bought in here anticipating a 60 breakout, if it doesn't hold the higher low, then they're kind of screwed, right? So they're going to be the ones that are going to help fuel this move to the downside. So I just went ahead and shorted 1,000 at 45 to start. Again, not much size, fairly low risk. For me, the risk was actually basically 48, 49. So I was starting with just very low risk. I might have given it a 50 over under test, but ultimately, less than $60 risk. I waited for some confirmation. I almost added at 41, but it just kind of goes against my rules to add in the VWAP there, even though I was pretty confident. So I waited for the VWAP break and made not such a hot ad at 139 for another 1,000. So it brought my average price to a 42. And like I said, when if I make an ad like that, that's a little questionable, because I normally, and I'm going to talk about what I think I did wrong in this trade. I normally advocate waiting for a nice bounce to scale in short. But in this case, I just got a little excited. I was thinking, you know what? It broke VWAP. Longs are screwed. This should wash out nicely. And, I was right. I did short 39. It's got the 42 average price instead of 45 because I got the second 1,000 at 39. And that's why when I do that, I'm always going to cover quickly, at least half or 2/3 into the first wash to make sure I get paid. Because the last thing you want to do is make an ad like that, get a 42 average, and have it come back and squeeze you out for a loss. That's the last thing you want. So when I make an ad like that, I'll cover quickly into the first wash, give the last bit a chance to go, and we gave it a good 25, 30 minutes. And remember, it just couldn't get going, so I covered up the rest at 36. And that was my day. So again, I basically didn't really risk more than 50 or $100 in any one given trade. Realized $1,200 on the day. Probably about 200 in commissions, so or maybe 250 in commissions. Took a few flats here and there. So yeah, overall a really good start to the week on a Monday for around $900 net. I'm only saying this to inspire you that it is possible to make money in this market. It does take patience. Again, I think it does help. As far as, depending on which broker you're using, if you're outside the U.S., I'm going to have to say I think TradeZero is one of the better options for smaller accounts. That way you can get in and out of trades more often without paying, an arm and a leg in fees. That plus they've had amazing shorts lately, so I got to really give it to them. They've got a great thing going on right now. Unfortunately, they won't accept any U.S. clients, so it would only be for those of you outside the U.S., but it'll allow you to take these, to scale in, scale out a lot more without having to pay an arm and a leg for fees. Yeah, thanks. I'm glad you enjoyed the explanation on that. I mean, it's something that took me years to develop this skill. And, some people ask me, like, well, hey, why don't you trade stuff like Apple and Facebook and Twitter? And it's like, well, I could, but, with stocks that are trading 80% algo volume and just, there's so much noise in them, you can't really do what I'm doing here with these. And you can't get percentage moves. Like, you're not going to see Apple move 50% today, but FCSC did. And we can make some, really good gains with very low risk on some of these trades as long as you're properly managing the risk. And so that's why it's so important for you guys to pay attention to the risk management strategies, know how to, plan the trade properly so that you know exactly what you're risking and that you're not risking too much per trade, that the risk reward makes sense in every trade. And this is exactly a good example of how I will love a chart for a long, but I'm not afraid to say, you know what, not anymore. Take it off, flip it around for a short, and make money on both sides, or take a small loss in the long and flip it around for a short. As soon as the chart or price action tells me that this is no longer a long, I'm out. I'm not stubborn. I spent my first 5 years of trading being stubborn. I don't need that anymore. I know what the right thing to do is now most of the time, or at least know how to position myself in a way that the risk is low and the reward is high. And that's pretty much what I'm looking to do every day. So I'm not afraid to admit that I'm wrong, or not really wrong. I mean, it's still a good setup, right? There's nothing wrong with this setup. It's very valid for a nice cup and handle through high a day. But as soon as it no longer is true, as soon as I see something that says to me like, hey, this setup could fail, and if it does, where do you want to be on it? Well, when I put in that lower high of 47, I knew I wanted to be short. So I was totally comfortable turning around, flipping that for a short, and then risking off 50 over under. So that's pretty much how the day went, guys. I really hope that the rest of this week can continue like this. But in this market, my expectations aren't to make $1,200, $2,000 a day. I'm fully part of the reason why I think today went so well is because I came in today defensive, thinking, okay, well, today all I want to do is trade low risk setups. Today's Monday. I want to ease my way into the week. We're in a new market. I'm not looking to be aggressive. I'm just looking to ease into the week here, look for low risk setups, spots where I can position myself for success, and leave everything else behind. So I think we did a good job of that today. I also wanted to mention, and congrats to those of you guys who followed me or joined me in on the FCSC short. And I want to talk about UVXY, of course, my one and only loss today, tarnishing my otherwise perfect day. And go figure. The one thing that I'm not well versed in trading is futures. And I talk a lot about how I think it's important to stick to your niche in trading. And when I step outside my niche, I'm putting myself I'm exposing myself to the possibility of taking a loss. And ironically, my entry in UVXY was a really good entry. I got long 60, just high 60s in here on this dip, and it was just enough with a little too much size that it washed me out. I had just a very low risk plan, and it was a little too tight with the stop, and it would have been a massive trade, but I took the stop on it to stay safe, and I had to slap myself and say, what are you doing? You don't trade futures. Our moderator in chat and my main trading partner, JB, is a professional futures trader. He's the guy that's trading futures in the room, not me. He's the one making the futures calls. I mean, if he gets a trigger for a short in the market, sometimes if the setup makes sense to me, I might take a long on UVXY. But ultimately, I have my niche, he has his. We got some nice diversity going on. I'm trying to stay away from the futures trades, although on Friday it worked out quite well for me with the $400 gain on UVXY. So today I just kind of took a tough stop on this first position. The entry was awesome, but it's just not really my wheelhouse, so I got a little uncomfortable and stopped it out. So that was the one mistake for me today. Right, so I guess that's it, guys. Do you guys have anything before, any questions or anything I can do for you before we call it a day? Great. Okay, yeah. Guys, let's just roll this forward into tomorrow. Just stay patient, stay smart. We're just looking for low risk setups. We're not looking to get rich this week, but if you just, stay calm, trade on, and just, look for those low risk setups. We'll call them as we see them. And, congrats to all you guys who are making your own trade plans based on our commentary. That's exactly what we're looking for you guys to do, to become self-reliant traders. So thanks again, guys. Have a great night, and we'll see you guys tomorrow morning for the watch list, which I'll put together tonight for you, and we'll go over it as usual, pre-market with the game plan at 9 a.m. All right, guys. Have a great night. We will see you tomorrow. Cheers.